Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I really wanted to hit this comment, make sure everybody heard kind of my side of things. The comment is, getting exhausted with this, I can't suffer any more of these painful days. I stupidly purchased heavier when everything was overbought. Not sure what to do at this point. Should have had stop losses, but I've been riding through it. What would you do? So number one, we are in very volatile things. If you're picking some of these really small companies that are exploration companies in any of these sectors, they're going to be extremely volatile. They are going to go up and down 40, 50% or more. And they could still be incredibly undervalued. They could be in sectors that are, the sector itself is incredibly undervalued. And you just bought it at the wrong time. It happens to me. It happens to every single person. No one is immune to what you are feeling and the experience that you're experiencing. So I have bought in stocks at the wrong time. I thought we were going to get a breakout on some of them. I buy it right before the breakout, and then we get cut in half, literally. I've had stocks go 80, 90% down on me because of problems, operation problems or license problems or some sort of problem that you can potentially have. And that's why I really don't put a ton of money in these higher risk, the exploration type plays. So I really mitigate my risk by my portfolio position size. Now, doesn't matter who you are, you're going to get caught in this volatility. Doesn't matter. I get caught in it all the time. I am not perfect with my buys. I am just like you are. I get caught. I get 20, 30% downs. Now, I ask myself, why did I buy the company in the first place? What drove me to buy these things? We've got the right market conditions. The sector's undervalued. I just bought it. Maybe it was going up. I bought it at the wrong time. If I think the company's good, I don't sell the company. I cost average in. If it continues to move up and down. So I continue to pile in. In Platinum, I bought that in 2019 and I got caught in the COVID sell-off. Do you know what I did? I know the value. It was completely undervalued. I know the cost curves. I bought the living poop out of Platinum. I probably had 20 or 30% of my total position size in Platinum at that time. I bought it before COVID. Then I laid down a 70% of the 100%. I increased it substantially. That would be something on the lines of like a 4 or 5x is what I put in there. I mean, I bought a lot. I swapped metals over. I did all sorts of stuff because I knew that we were under the cost curve. And we're far above the cost curves for palladium. We're far above the cost curves for gold. So I thought that Platinum was the best deal. So rather than focusing necessarily on your losses in your account, which a lot of people do, they focus on the loss. They log in, oh no, I'm down. I mean, you don't even want to know. Wait until when you get bigger and bigger portfolios, just wait. Wait until you get your first $100,000 down day. You don't want to. Believe me, you don't want to experience very large down days. As you get wealthier and wealthier, you're going to see larger and larger upswings and downswings. If you're going after 20, 30, 40 baggers, volatility is going to be in some of your portfolio. And it's going to be throwing it all around. You could have massive up days or massive down days. And it's going to get larger and larger as time progresses. That's why we use portfolio position size allocation. That's why we know what we're doing. We buy when it's cheap and we do the full risk button when the risk is the lowest. You use technical analysis. You try your best to get the lowest that you can, and then you just got to hold on. Maybe don't even log into the account, because sometimes I don't even log into the account. I don't want to see it. It's so volatile sometimes. And remember, I'm only using a certain portion of my money as well. It's a very, I might only be doing 20% of my entire net worth in these types of things. So another thing that I am doing is I'm not buying these companies just to make money. I mean, I am, but I am buying them because I have a strategy. I am positioning for the future. I am looking out long term and saying, and saying, all right, how can I make money in copper? If copper's the bridge material between where we are today and another future after oil, and I'm investing for myself, for my family, for my kids, I am taking the long approach and saying, well, how do we get there? How do we get from where we are today to over there? I like royalty companies, and then I look and research, and again, I like Nova Royalty. I think they have a good CEO. I think he has a good strategy, and his strategy is to go get royalties on very large deposits. Now, you're going to say, oh, from the money perspective, it's a large deposit. I'm looking at it from a strategic positioning, like these things have to go into production. They have very large companies that are operating these mines too. So the counterparty to Nova Royalty and the royalties they are getting, the counterparties are big, diversified mining companies. They're the big boys that are well capitalized. They're not going after these teeny little things. They're going after the Rio Tintos, the First Quantums, the Antofagasta, the Anglo-American Platinum. Like, they're going after the big boys, and their counterparties are the big boys. They're gonna have the money, and if they're gonna put these deposits and start mining them, they're gonna do it. They've got the money. They have access to capital. They can do it. And that's why I prefer that company, because they are looking at all of it. They're looking at the big assets with the good counterparty risk, and this thing is acquiring it at the very close to a good bottom. Copper's gone up, but the copper companies haven't. Everything in commodities is super depressed, and they're buying it before they get developed. They're developing these mines, and they're getting the royalties for really good prices. That's how you have to do it. You buy it before it's producing. If it's producing, you're not going to get that great price. And they're doing it through equity in the company and through cash. So they're doing a multi-approach to save cash. They give some equity to the person so that they can have a stake in Nova Royalty. I just think that's a really good way to play it. So if copper prices go up or volume goes up, and if it will, because these are developing mines, and then what's going to happen? They're gonna research and prove up more reserves on those properties, which they're going to get a royalty on. And they don't have to spend to do it. So I'm looking at these companies from a strategic point. Why uranium? It's cheap, and I think we're going to have to put uranium in for baseload power. It's a must. It's not an if. If we're going to cross through copper and we have shortages of copper, what are they going to do? The easiest way to centralize a system would be to put in a nuclear power plant and run one line to a nuclear power plant or a couple lines, instead of spreading it out amongst a whole bunch of wind turbines and solar panels. We can conserve copper by putting in nuclear. And if nuclear is the cheaper alternative, and it's easy to store uranium versus putting electricity in batteries or hydrogen, well, that's a viable alternative. And so I look at all those things. So I've got uranium, because that's a perfect thing to go into. I've got oil. Oil is your thing that's going to become scarce. And I think there's just a good opportunity there. And then you've got the copper, silver, platinum, physical metals, all that stuff. I mean, this is a strategic outlook on the next 10, 20, 30 years. This isn't something that I necessarily look at my portfolio and say, oh, it's got to go up to make me feel good. I'm looking at it like I got to get as many assets as I possibly can when it's cheap and continue to pile in. If I miss time something by 10, 20, 30%, it's okay. I'm a human, just like everyone else is here. It's okay. But you got to look at the strategy. What is your investment strategy? Why are you investing in these things? And if you have that strategy, if you're looking out 10, 20, 30 years, and you're saying they don't have the copper, there's no way they have the copper, and this company's buying all of the developing tier 1 mines and getting royalties on it, it's like, dude, that's cheating. It's because if you have inflation, which we have inflation, the environment is inflationary, we've got the housing market, you're looking at this going, well, copper could double or triple over this 10, 20-year period. What's going to happen then? They get royalties on all of it, and then they just start proving up reserves because these are all new deposits. I mean, that's perfect. that's a perfect fit for me. So I've bought Nova, just to let you know, and I'm not trying to sell Nova here, but I bought it like $1.30, $1.19, $1.40. It went all the way up, and I waited. I bought at $3. I bought at like $2.25 or $2.20, something like that. And if it continues to come down, I'm going to continue to pile into it because it's a royalty on minerals that I think are going to be massively needed in the future. And I also have some gold and silver royalties as well. Big ones and small ones, I'm spreading it all around. I also think we're hitting peak gold here pretty soon, where we're not going to produce more gold. We're going to peak out its volumes per year and start to decline, which means that gold's going to get pretty rare. And I'd like to have some royalties on it. I mean, that's like cheating. That's my take on it. So I look at these things as acquiring assets on the cheap for the big long haul because the world is going to need it. When you listen to other channels, I come away like my head's all like spun around, and I don't like understand their viewpoint. They think technology is going to solve everything. But there's this problem that they're going to have, is that there's physical constraints in the world, and technology will solve some problems, but you're going to get into predicaments at some point. A problem has a solution. A predicament has an outcome where you have to manage your outcome. Technology, this is what they're going to say, it's deflationary. And that thing right there is the very problem. As technology becomes, as it develops and things get cheaper, the adoption rate goes widespread. And all you end up doing is consuming the valuable resources of wherever you're at an exponentially quicker pace. So you could say technology is a savior, and then you could rotate it and say technology is our thing that's going to bring us all down. Because technology is going to consume ever greater quantities of whatever's on this earth that much quicker. They'll say airplanes too expensive to fly in, yet we're all flying in airplanes and consuming oil faster than ever. Technology is too expensive. That plasma TV, too expensive. Now everybody owns LED TVs, and it doesn't matter how much energy it necessarily consumes. It's the components that go into it. It's silver. It's all these different materials. But everybody has them. Now they have multiple TVs. Do you think that's good for the environment when everyone used to not buy it? Now we all have like 4 TVs, 2 computers, 2 computer monitors, 3, 4 TVs. I mean, we're going to blow through silver like it's nothing. Technology increases the outreach of whatever they're making. And whatever they're making, if it goes to more and more people, means that we're going to consume more and more things. We're going to stress the earth that much more and the minerals that are on it. So what I'm doing is I'm taking a strategic outlook on the earth and saying that humans are going to basically populate as much as we possibly can, consume as much as we can until there is a natural constraint. I am speculating on what those constraints might necessarily be. I'm saying copper might be, silver might be, platinum might be. I'm taking physical metals because that's what the value is going to be. And I'm taking royalties on it because if we have shortages of energy inputs, and maybe technology will solve that, and then we'll just extract even faster, which will help my royalty companies. But I don't want the added risk. I want a diversified royalty company getting royalties from a whole bunch of different areas, which is inherently lower risk. And it has lower risk from input cost inflation. Win and win. So my strategy is not, look at the portfolio, it's got to be gaining today. I'm taking this from an approach of 10, 20 years from now, or 30 and 40 years with my kids. What's going to happen? Like, I am setting up wealth, and I'm trying to store it somehow. I can either store it physically in your like physical bullion, or I can store it in the ground through a royalty company where it hasn't been mined yet. And eventually when it does get mined, they're going to continue to add value by storing more and more of that wealth in the ground, whether it be copper, gold, silver, platinum, wherever it is. I don't know any platinum royalty companies, but you can store it in the ground wherever they have it all over the earth in the ground, and when they extract it out, I get some percentage of it. And I've got management teams working for me as a shareholder to get more value for me. That's how I view all this stuff. Hopefully that's how you view it, and it's okay if you don't, but that's how I view my investments. And you're going to have to rip a lot of these things out of my hands because I'm not going to give them up anywhere near these valuations. These are 100-year lows. I'm going to be accumulating like a madman for me and my family and everyone else that could potentially use this money. If you guys like this content, give me a thumbs up. Put any questions or comments below, and thank you for listening. This is Finding Value.